And we are live. Welcome, everyone, to the Melanin Initiative. I'm Dr. Kimberly Madison, a doctorally prepared nurse practitioner and one of your co-hosts here at the Melanin Initiative podcast, along with Alicia and Geraldine, who send their love in their absence. In healthcare, there is often too much information and not enough time. Here at the Melanin Initiative, we avoid TMI. By breaking things down into language you can understand, we create a safe space for you to ask your questions and share a nursing perspective without taking up too much of your time. We're so excited. Happy New Year, everyone. We're starting a new series called Finance and Medicine. And we're joined today by a very, very special guest. And I cannot wait for you all to meet her. She is a wealth of knowledge, and we look forward to collaborating more in the future. We have a lot of information to cover. And so we just want to jump right into it so that we can maximize our time together. A quick little disclaimer before we get started. Remember, this show is for educational purposes only. The opinions expressed here are our opinions alone. They're not a representation of any of our affiliations. If you're experiencing a medical emergency, you should seek medical attention from your healthcare provider. If you're having a physical emergency, you can call 911. And if you or someone you know might be having a mental health emergency, you can call 988. Welcome, Ms. Cooper. Welcome to the
Thank
Melanin
you.
Initiative.
Thank you so much. I'm so happy to be here. And I'm also happy for the invitation.
It's our pleasure. We're so excited about what we're going to be able to discuss today. We're going to have her back. You're going to see her again. We're doing a two-parter. We're going to split this episode into two. And then I think you're going to see her in future seasons as well, if everything goes well. So let's just jump into it. So this first episode, we're going to be talking about life insurance and the relationship between that and healthcare, which often does not get talked about enough. And everyone is going to have to answer these questions. And so we just wanted to kind of shed some light on it and start with sort of like some basic information so that we can all be on the same page. And over time, we can all grow together and learn more information together. How's that sound?
Sounds great. Sounds very good. Thank you. Thank
Before
you
we
for your time also.
Oh, yes, it's really a pleasure to have you here. And I'm so excited for the audience to learn a little bit about you. So before we jump into our questions, if you could just tell us a little bit about where you're from and what you're not doing when you're on podcasts.
So I was born in Jamaica. So I came to the US the year 2001. It has been so long ago, I almost forgot. Yeah, so I came here as a nurse, and I worked as a nurse for a couple of years, as a staff nurse. And then I worked also as a travel nurse. So I worked as a nurse for almost 30 years. And then I reached a point in my life where I decided that I was going to go into finance because nursing was becoming it wasn't the same, put it that way. I'm becoming overwhelmed, burnt out. There is always more work is just always more work and not much, manpower, you know. So when I first moved to the US, I was working in New York. Then I traveled from New York to Houston, and now I'm in Georgia. Yes, I've been around a lot, traveled a lot around the US. Yeah.
Okay, and if you could briefly tell us how you got into life insurance.
Okay, so I got into life insurance. It was an accident, I would like to say, but it happened by accident. I didn't get up one day and say, who gets up and said, I want to be a life insurance agent? I think nobody. Okay. So what has been happening is I've been a nurse for over 20 plus years. And, I thought I was going to die as a nurse, honestly, when I just started. I enjoyed my work. I enjoy working with the patients. I really loved, the feeling that I got inside when, you have a patient, they're sick, and you watch that patient walk out that door. It's a wonderful, beautiful feeling to nurse someone to health and to hear them say thank you. That's all you want. That is all you want from them. Thank you was enough for me. So I've been working for years, like I said, but I began to get very burnt out, going in every day, clocking in, clocking out, 9 to 5. Um, it was just like healthcare has changed over the year. It was more like money driven. It was not the same like we started out. Even the patients complain. It's kind of like we were given more and more work, and then with the advent of computer, we were even taken even more away from the bedside. So I find myself doing more. I felt like I was a robot. Put it like that. I was just working. It was just like the next task. Those that were at the top, you complain that you need this, you need that. They don't listen to us. And I find myself just doing less and less patient care, but I was doing more computerized work. I didn't like that. I wanted to be more with my patients, and the patients complained also, and I didn't like that. So, like I said, I felt burnt out, and I was just tired of clocking in, clocking out, 9 to 5 every day. It was almost 30 years. I started to look at my life, and I was saying to myself, how long is this going to continue? I no longer feel fulfilled. I no longer enjoy my work anymore. Unfortunately, healthcare has become more like a business, and I could see the impact of it on our patients. And it saddens me deeply. So I was looking for a different route anyway, because I no longer felt fulfilled. So I started looking for, another avenue where I could help people. And I wanted another career, a second, but I didn't know where to start. I didn't know where to go, to be honest with you. But then I said, let me start, if you're going to change your career, let me start by, looking at my finances. So I said, let me start there. So I looked at my retirement fund. And then I was like, I had this 401k like forever. And then I was like, I am a saver. And I put a lot of money into that 401k, just like they tell you to do, put as much as you can away for retirement, right? And I did that. But then when I looked in the 401k, I actually had less than what I put in. So I was like, how is this possible? Honestly, I had no idea how it was possible. I was a novice to finance. I did not know anything. But I said to myself, this doesn't look right. That much I knew that this wasn't look right. Something had to be wrong, because going to school, they taught you that 1 plus 1 is 2. So if you put something in a retirement account, you should see what you put in. So I started looking. I didn't know where to look, actually. I started looking at Google and YouTube. So that's all I knew. And so I said, I got to find a way to at least protect my order in retirement. Yeah, I was trying to change career. I knew that I didn't have another 30 years to work for somebody else. And at the end of 30 years, what did you have? Retirement that was not even adequate, retirement that didn't make sense to you. So I started, researching blindly, mind you. I had no direction, because I didn't even know what I was looking for, but I knew I wanted something that I could. I needed more information about protecting my hard-earned retirement. So in the process of it all, my friend called me. I got a call from an old friend that I've not heard from for a long time. And then she said to me, Glacia, I'm going to be getting my life insurance license. Then I said to her, okay. I was saying to myself, okay, that sounds great. But then I thought to myself, I never wanted to be a life insurance agent. Okay. So she then said to me, I need you to talk to somebody. I said, okay, who do you want me to talk to? She said, I want you to talk to this insurance lady. And I said, okay. But in my mind, I was thinking, I have life insurance. I don't want to talk to this lady. But I am the type of person who is always open. I'm always open to hearing what another person has to say because you may never know. You may learn something new. And I also knew that when this friend asked, for a favor, is because she really needed it. So I kind of understood that. So I said, okay, let me go ahead and listen to what she had to say. And oh my God, I was thankful that I did that day. In 1 hour, a stranger taught me so much about money and how money works. And I would say, I spent so many years in college. They told you go to school, get a degree. I did everything right, and they said go work for a company for 20, 30 years and retire. Here I was almost 30 years later. I can't retire. But in that 1 hour, I also learned why. I also learned why I put in so much money and I was getting far less out of it. So she told me that, they were also looking for people to hire. And then I said, a lot of people need to know this information, because the information that I got was mind blowing. They taught me about life insurance with living benefits. I didn't even know that existed. They taught me about, so life insurance with living benefits basically is you could actually use your life insurance while you're living, as opposed to when you pass away, your beneficiary gets the money and you never get to use it. So I said a lot of people need to know about this because if people just know this information, they will make better financial decisions. You know, a basic fundamentals about money they don't teach us in school, and I just don't understand why. So I said I will be helping people with their financial health, and I also, in some aspect, will be helping people to understand that you because as a nurse, I help people while they're sick. But as a life insurance agent, I was going to be helping people to understand that, look, you need life insurance before you are sick. So I catch people before life happens. So that's how the whole process began.
Wonderful. And so, oh, there's an echo. Okay. Oh, wonderful. And so let's get into what is financial literacy. And I love your attitude and approach towards it because I think it really parallels health literacy, where these are both two important topics to all of us, yet we're not really exposed to the fundamentals and the basics. We're not taught it in school. If your family isn't uh, knowledgeable about it, then you kind of are out here as an adult trying to figure out your way. And sometimes you lose time, money, and causes a lot of stress trying to figure it out. And some of us never figure it out. And so I'm so excited to bring these two topics together in one conversation. And so if you can, the way you explain it to your clients, tell us how you define financial literacy. Oh, you're on mute.
There are many different definitions out there about financial literacy, and some of them are really complex. So I usually like to be very simple. So financial literacy, in simple terms, is financial literacy is the knowledge of how to make smart decisions with money, and this can include preparing a budget, knowing how to save, deciding favorable loan terms, understanding the impact of credit, and distinguishing between different vehicles for retirement.
Excellent. And then what is life insurance and why is it important?
So, life insurance is a contract, right? It's a contract that is done between the life insurance company and the policy holder or the policy owner. The contract is simple. The policyholder or owner agrees to pay a fee or a premium, right? And in return, the life insurance company agrees to give the designated beneficiary a lump sum, or in case the individual passes away. So basically, and that is called a death benefit. It's called a death benefit. So it's usually paid out tax-free. A lot of people don't know that.
Mm. And are there different types of life insurance?
Yes, there are different types of life insurance. There is two major types. You got temporary and you got permanent type of life insurance. And why is life insurance important? I think I heard you ask that question too.
Mhm. Yeah.
So life insurance is very important. Honestly, life insurance should be one of the most important products or assets that a person decide to invest in. Because why is it important? If you have loved ones that you got children or loved ones that you care about, you don't want to die, God forbid, and leave them in debt. You don't want to do that. So life insurance assists the loved ones or the people that you leave behind to have at least a secure financial future for a period of time, and it helps them to get back on their feet.
And so what are some common questions you receive about life insurance?
Oh, okay. A lot of times, some of the common question I receive is, how much does life insurance cost? Because a lot of people assume life insurance is very expensive, and that's one reason why they shy away from buying life insurance. Some people want to know the difference between temporary insurance and permanent insurance. Another popular one is, how do I buy life insurance? What's the difference between how much life insurance do I need? What if my health changes? When can I expect a return? Is whole life policy the same as index universal life? How much life insurance coverage can I get with X amount of money? Can I get a common question I've been getting lately is, can I get life insurance if I've had a stroke? Yeah, that has been coming up a lot. Why do I need life insurance if I don't have any dependent? That's another common one. And it's a very good question too. I have life insurance at work already. Do I need to buy more? Another common question. Another common question is IUL or index universal life policies, are these new type of policies?
And then do you answer those questions for people on the spot, or do you direct them to a resource?
No, I usually answer the question right away, because usually when I'm conducting an educational session for somebody, is we really sit down and educate them, and we are not rushing. We are really answering their questions, because these are people need to make informed decisions, and they're asking the questions because they want to know. So we answer them for them. Yes.
And I don't think we share with the audience, what is your title now?
I'm an insurance broker, and I also do retirement, but I specialize in fixed index annuity and in the index universal life.
And did you have to go back to school for that, or just get like a certification?
No, you don't have to go back to school. You get a license.
Oh, okay.
You have to sit an exam.
Mm-hmm.
You have to sit an exam in the state that you're in, and that's how you get your license. And once you take an exam in whichever state you're living in, then all you have to do is a non-resident You don't have to sit another exam. You just apply for a non-resident license.
Oh, okay. What is that exam called?
Huh?
What is that exam called?
Life, life license, because you have life and health, and then you have life only.
Oh, okay. Oh, very interesting. Okay. And so actually you brought up some really great questions. The one about the whole life versus index, can you just elaborate on that a little bit?
Okay, so whole life. Most people are familiar with whole life insurance because um, that's what people know. That's what they usually buy. But index universal life has been around for a long time too. But whole life, whole life insurance is it's a permanent type of life insurance, and also what happened is with all life insurance, the individual usually, if the individual passes away, one downside with life insurance, with all life insurance, if the individual passes away, the 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 beneficiaries usually walk away with the highest of the two. It whole life has a whole life policy has it has a cash value, and it has also a death benefit. Okay, so God forbid the insurance, the beneficiary passes away, the insurance policy usually, the insurance company usually gives the beneficiary one of the two, and it's usually the highest of the two. For the most part, it's gonna be the death benefit, because when it comes down to the cash value, it takes a while for the cash value to accrue and grow, right? So, like I said, the whole life policy is permanent. It comes with a cash value where the individual, when the individual pays their premium, a portion of it goes into the cash value, a portion of it goes towards cost of insurance. Uh, um, with with whole life policy, doesn't matter which company you buy from, you are it's fixed. The interest rate is fixed. It could be 2%, 3%, 4%, depending on the insurance company. You do not own the cash value in whole life policies. You can only use it while you're alive, but once you pass away, it goes back to the insurance company. And you can, with whole life policies, the owner usually pays a fee right throughout the lifespan of the policy. With Index Universal Life is another permanent policy. Okay, it also comes with a cash value, and it also comes with a death benefit. So the difference between life insurance, the difference between Index Universal Life and whole life is that, God forbid you pass away, your beneficiary actually walk away with both the death benefit and the cash value. What I always tell people also, with Index Universal Life policy, it can be used for a wide variety of things. It can be used for retirement. A person, it can be used for retirement. It could be used for you saving money towards purchasing and investing for investing purposes. Uh, you could use it to save to send your, pay for your child college. Um, um, Another very important feature is that okay, it sounds all good. That is what I always tell people. They always ask, one of the main questions they ask about Index Universal Life is that it sounds too good to be true. But one of the downside of Index Universal Life policies is that after 10 years, before 10 years, you're not able to get the money. The money is taxed within the money has to stay in the policy for 10 years before you can touch it without getting a penalty. But after 10 years, you get all that money tax free. So let's say an individual is very young, they're like in their 20s, 30s, if they're solving for retirement, then that policy is a very good policy for them, because if you're solving for retirement and you leave the money there for 10 years, you get back the money tax free, penalty free. So what is 10 years for somebody to wait, if you're trying to save for retirement? And with Index Universal Life policies, the more you dump into the policy, the more the policy compounds and grow. These policies are designed actually to compound and grow the more you put into it.
And so when you say cash value, you're referring to the money that I'm putting into it, or the actual amount of the policy itself?
When it comes on the cash value, Index Universal Life, just by nature of how they're permanent policies, and these permanent policies, these type, they come with a cash value. This is totally different from the death benefit. It's totally different from the death benefit. So let's say you come to us and you want an Index Universal Life policy, right? A part of the money or the premium that you put in, a portion of it goes into your cash value. And then the next portion goes towards death benefit. So there is a cash that is accumulating, So that's the way Index Universal Life policies work.
Okay. And if you could just explain the difference between temporary and permanent?
So temporary policy, as it says, is temporary. A temporary policy has an expiration date. Whole life and permanent policy, they never expire. As long as you pay your premium, they will never expire. The temporary policy, they have an expiration date, and they're usually cheaper because they eventually do expire. You could get a 10, 15, 20, 30-year policy. And they eventually expire. That's the main difference between them. So they're cheaper because they expire. You could get a large amount of coverage though with a permanent policy, because you could get a large amount of coverage with a temporary policy because they're cheaper, and they're cheaper because they expire. The permanent policy is going to be more expensive because they never expire.
And does it still have that fee associated with it if you draw it out early? Or even can you draw it early?
Well, the kind of policies that we sell, usually temporary policy don't have a cash value. They usually don't have a cash value, but with the type of policies that we sell, they come with a living benefit. If it's a temporary policy, all our policy actually come with living benefit, meaning that, you could actually cash out the death benefit while you're alive. But temporary policies, they don't have a cash component to them. The debt, they come with a death benefit. The type of policies that we have, all of them come with living benefits. So the temporary one will have a living benefit, meaning that, you could actually cash out you can accelerate the death benefit while you're living. These policies normally come with Depends on the life insurance company. They come with different riders. We use National Life Insurance Company a lot, and it's because it's one of our top carriers. So the living benefits portion of it is that when we talk about living benefit, is the riders that come with the policy at no additional cost. So to answer your question, they don't have any cash, but they have living benefits. That I got that question a lot because I kind of realized that a lot of people mix up the living benefit with the cash value. But temporary policies don't have a cash value, but they are designed nowadays to for you to actually use them while you're living. And so people kind of confuse it. So let's say, like I said, they come with several riders. Some company have 3 riders, 4 riders, 5 riders, or 6 riders. Okay, National Life Group is one of the top carriers. Like I mentioned, they have up to 6 riders. Okay, so what are those riders? Those are additional benefit that the insured get without having to pay additional money, right? So, like I said, with in the case of National Life Group, 6 riders, they have critical illness, critical injury, chronic illness. It also comes with Alzheimer's disease. They added that one not too long ago. And terminal illness, and then you got another one called a fertility journey rider. So let's say, God forbid, the fertility journey riders are for people like, a lot of times young people, they're trying to have a baby, but things doesn't go as planned. And so they have, some people have fertility issues. If it's a qualifying event, you could actually cash out, accelerate then your debt benefit, and use it. Just use your debt benefit. So let's say you had a $1 million coverage. The insurance company could actually give you up to 80%. It depends on the company, 80 to 90% of your debt benefit coverage to use to do whatever you want to do with it. Actually, you could use it to continue. Let's say it depends on what the situation is. So let's say you got sick, ill, or disabled, right? You could cash out that benefit. Use it to do whatever you want to do. Depending on the state, you could use it to continue to pay your regular bills. You could use it to pay off your mortgage. You could use it to pay for other medical bills. It doesn't matter. So I can see where the confusion comes in, where people think, that like a temporary policy as like a cash value, because in the past, the older type of life insurance, you couldn't do this. These are the newer type. You couldn't accelerate your debt benefit and use it for whatever you want to do. So I see where the confusion comes in.
And is that what people say when they are looking to accelerate their death benefit? Do they use those words? I want to accelerate my death benefits.
No, I try to avoid using that word too, because a lot of people actually don't know that these policies exist. Mm-hmm. And that is one reason why I am also enjoy what I'm doing now, because I can actually educate people. They come to us, a lot of people come to us seeking life insurance, but most of them, I could probably say 9 out of 10 of them don't know about the new type of life insurance. And when they come to us, they're actually looking for the life insurance as they know it, the older type where, God forbid, you pass away, then your beneficiary is the one really that gets the money, not you. You can't really use it. You never get to use it while you're living.
And that's what you're referring to as the death benefit, correct?
Pardon me?
And when you say the old type of insurance, you're referring to those death benefits that we are kind of used to hearing about. But the ones you're really excited about and teach a lot about are the living benefits.
Yes, the one that comes with the living benefit with the different riders attached to them that I'm telling you about.
So that's
Yes,
only living benefits, the different riders.
the living benefit is yeah, the different riders, and you could actually use the death benefit while you the owner of the policy is living.
Is
Because with the
living and death benefits two separate things though?
I would say it's kind of the same thing because you're actually using the debt benefit.
But you're accelerating them, so that's when it's called living benefits.
But it's living benefits because you actually get to use it while you the owner is alive. In the
Now I
older type of life insurance, you can't use it. You die. You God forbid, but you die. You're already dead. And then
Mhm.
your beneficiary is the one. So it's kind of like more passing on generational wealth then.
And if
But
you have one of those older policies, can you convert it?
oh, that's a very good question, but I doubt it because um it
Like,
already doesn't have living benefits. It's a total different policies.
okay,
It's
so
the
you
old type.
my parents, for instance, who've had a policy for my whole life, they would technically have to start over with a new one.
Yes, they would have to because yeah, they would have to. But we typically don't encourage anyone to get rid of the policies that they have until they're approved with the new one.
Very wise. And so
Yeah.
this example you gave about fertility, you said, say that policy is worth $1 million and they want to use it. So would they be taking out, and you said they would get 80 to 90% of that, 80 to 90% of the million, or 80 to 90% of whatever they've been putting in with with the premium?
So so remember temporary policy does not have any money going towards any cash value.
Okay, so this is all permanent.
Only permanent policies have a cash value usually.
Okay.
So, but whether it's permanent, whether it's temporary, all the policies that our company sell or I sell, they come with living benefits. And living benefits is separate from the cash value. Because you're using your debt benefit. That's what you're using. So let's say you got a permanent policy, right? And God forbid something happens and you decide that you want to get cash from your debt benefit, right? You your cash is it's there. It's there still continuing to compound and grow, but you just take money from the debt benefit. So you can depend on the life insurance company, you could get 80%. They make you take 80% up to 90%. They usually don't make you take everything because at the end of the day, you need to leave something for the beneficiary, you know.
Mm. So yeah, so once you take some of that death benefit, are you able to come back and put more back in?
Uh yes, you could. Yes, you could, but um you definitely know that when you take some out, it's gonna decrease the debt benefit. Yeah,
Yeah,
it's
but
gonna
if
decrease.
someone wants to take it out to, I don't know, pay for the fertility care, but then they want to, maybe they're only in their 30s or 40s, and they still want to be able to put that money back, so that they build it back up. That's a possibility.
Yes, that's a possibility.
Okay. Okay, so just to close this out, with all this information now that people have been given and this new vocabulary, where should they start if they want to kind of take this journey and learn more about life insurance?
So, if they want to learn more about life insurance, they could start by, getting a referral. Get a referral from, like a reputable life insurance agent. First of all, I would encourage people determine first, do you need life insurance? Because a lot of people need life insurance, but do we all need life insurance? You know? So there's a large number of people, yes, in America that need life insurance. So I would say first start by determining if you need life insurance, right? And also, you have to ask yourself some other questions like, are you planning to get married? Are you planning to have children? Are you planning to have a family? Um, Other questions that you could ask are, do you financially support your aging parents? Are you currently in debt? Because, a lot of us have mortgages, right? A lot of us have like student loans, debt, and God forbid we pass away, we leave all those debt to our loved ones sometimes, and um, do you have estate? You know, do you have funeral? Are you concerned about like, funeral costs? God forbid you pass away. Do you want to leave all this, financial burden to your loved ones? So those are some of the questions that you could ask. And then, you could decide once you get those things out of the way, you can decide how you buy life insurance. Because there are different options. You could decide to buy it from a agent, like somebody like myself. A lot of people refer other friends or so somebody that you trust and know. Or some people choose to buy online, or some people choose to go to the carrier directly. So that's where you could start. Mm-hmm.
Excellent. Before I do my closeout, is there anything else you want the audience to know about life insurance?
Uh, um, oh yes, we could tell them a little bit more about gaps in life insurance. Do you, or if that's okay with you?
Yeah, that's great. Mm-hmm.
Okay. There's a common misconception that Black communities, people in the Black community do not have life insurance, but that is not necessarily so. Studies have shown that more Black Americans actually have life insurance than our white counterparts. But the percentage, the gap is not a lot, but the difference is that we get life insurance for burial reasons because that's the way we have been introduced to it. You know, Historically, life insurance was sold to African American as burial insurance. So we usually get a small amount, and it's usually more expensive. Yeah, and then the door-to-door salesman, they're not usually coming to educate us about life insurance. So a lot of times we don't know our options. you know. And for a long time, Black people were not even allowed in rooms where life insurance was discussed because, you could use life insurance for asset protection, right? You could lose life insurance to, or you could get life insurance for your children. But so they don't know this. They get the burial insurance. So God forbid, the breadwinner passes away. The life insurance that they get, the burial is just the bare minimum. So they use it to take care of their funeral expenses, which is good. But then there's nothing left to pay to pass on to the next generation. There's no generational wealth creation building, you know. Um, yeah.
And you said it's more expensive. Do we know why it's more expensive?
Back then it was more expensive back then, but nowadays with internet, and advancing technology, people are becoming more and more aware of what is out there. So, but back when I'm talking about more expensive, I'm talking about back then because after the civil war, a lot of life insurance companies started began classifying African Americans as higher risk, especially if they were a slave before. And so when they sell them life insurance because they view them as a higher risk, they were selling them for more than their white counterparts. But nowadays, with the advent of technology, the internet, YouTube, Google, the information is at our fingertips right now. Things are different because a lot of people are more open to learning, and they getting out there to get educated. So I wouldn't say it's the same now. It's not the same like it used to be. It's changing, but there's still need to do more work, but things are changing for the better.
Yes, and hopefully we're contributing to some of that.
Yeah.
I can't thank you enough for everything that you've shared with us thus far. I look forward to continuing our conversation in future episodes. If you can share with the audience how they can connect with you.
Okay. I do not have a website as yet. So typically, but I'm on LinkedIn, Instagram, and Facebook. So
And I'll
they
put those
can.
links in the description box.
Okay, and my username is usually my name, Glacia Cooper. So if they type in my name under any of those, whether it's LinkedIn, Instagram, or Facebook, they'll find me. And also, huh?
Oh, go ahead.
And also, I do have an office based in Georgia. So for the people who are local, they could actually come to the office.
Oh.
They could actually come to the office because for people who are out of state, we actually educate them via Zoom.
Oh.
And then those who are local, we invite them to come to our offices. So on Tuesdays and Saturdays, actually, we have an overview of what we do, and we invite the public to come in.
Oh, that's excellent. Where should people start with that? Just contact you with the links you provided?
Yes, they could contact me on Facebook. They could use Messenger. Yeah, they could contact me on the LinkedIn, the same way you found me on LinkedIn. Yes, or
And
Instagram.
they should say that they're out of state and they're in state and interested in those introductory classes or video sessions.
If they're interested in learning more, yes, they could reach out that way.
Oh, okay, wonderful. And I know you're going back and forth between Houston and Georgia. So is that where you, I guess, help clients in both those states?
Actually, once you get a life insurance license, you are eligible to practice in all 49 states, including Puerto Rico.
Oh, wow.
Yes. So I could be anywhere in the world and still work. I don't have to be in an office. I could be out of the office and still conduct business.
Oh, wow, that's awesome. Yeah, and we love that you're able to tie in the healthcare piece with the life insurance and the financial literacy, because as you demonstrated, a lot of questions you're getting are health related, fertility, the stroke patients, death benefits, right? And so, yeah, that was wonderful. So I can't thank you enough for your time that you've invested in us today and helping to shed some light on financial literacy and really what life insurance is. One thing I think we've demonstrated is that there is still a lot to learn, and it's good to take it in small doses. And hopefully we've been able to answer some of those questions or at least pique people's interest. Maybe they've heard about this before, and it's the beginning of a new year. People like to start new chapters and new habits. And, why not now? Now is a great time. And so today we talked about life insurance. We talked about financial literacy and what it is. We talked about that there's different types of life insurance, both temporary and permanent. There's also whole life and index. We talked about so many benefits that you can get from it. And I'm so glad that you spent a lot of time talking about other ways you can use life insurance outside of the death benefits, because in our community, that is primarily what we associate it with. And as you've explained, it can be used for so many more things while we're living, as well as generational wealth, which is becoming a really popular topic, thankfully, in our community. And so the more we can learn about how we can not only generate that generational wealth, but pass it on both physically, but also through the education to our family is really, really important. And so everyone, you can always email us your questions or show ideas to tmi.melanin@gmail. Subscribe to our YouTube channel and follow us on Instagram, TikTok, and Facebook. Please share the show with your friends. Rate the Apple and Spotify podcast. It really helps you support the show, and it helps get the message to those who really need to hear it. You can find our social media links in the description box and any resources that we brought up today. We release a new show weekly on TMI Tuesdays at 10 a.m. on YouTube and all your favorite podcast apps. Please follow, like, and share our content with all your friends. We thank you, Glacia. Thank you so much. I can't wait to bring you back. And thank you, everyone. Thank you for watching.
You're welcome. Thank you so much for the opportunity.
Anytime.